To record a sale for taxable products or services, first open the Create menu and then choose the sales transaction underneath Customers. The process for recording a taxable sale is the same for both sales receipts and invoices. Now, enter the customer's name and then enter the details for the sale, such as the terms that you give the customer, the invoice date, and the due date. In the Products and Services area, enter all of the things that you're selling to your customer. Let's choose Lawnmower from the list. And notice that this product or service has been marked as taxable. That means that when this product or service was set up, it was marked as taxable, or when it was later edited, it was marked as taxable. Then, enter the details of the sale, such as the quantity, the rate, and the total amount. Let's enter another product or service below the lawnmower. In this case, we're going to enter trimming, and this is a service we offer. We're going to enter 5 hours of that, and the total is $250, but this is a non-taxable service. Scrolling down, here we can see that QuickBooks calculates a subtotal of all of the amounts pre-tax. Then it divides up the taxable subtotal here and applies a sales tax to that amount, which is $72. The total amount for this sale is $1,122. So QuickBooks is calculating the sales tax for us on this sale. In order for sales tax to be assessed on a sale, the product or service has to be marked as taxable, and the customer must also not be exempt. QuickBooks automatically calculates sales tax and puts the appropriate amount of sales tax into your sales tax liability account.